You're watching today's video technical update presented by FX Times. It is Friday, August 20th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. I'll be using VT Trader, so please download this trading platform to follow along. The greenback is ending the week hanging on some gains. You can check out the analysis on many US dollar crosses and few others in the weekly update, which you can find on the link from the layover that will pop up in the bottom. The Japanese yen is also strong, and I will take this video to take a look at a few Japanese yen crosses. This video is being produced at about 1:15 p.m. Eastern Time during the US trading session. The next pair is the pound yen, and this has been the wedge that we saw since the beginning of the week, and the market is at the moment testing this support here where it's marked D. So D is likely to be complete. Now A, B, C, D, and then we should see one more rally before this wedge pattern completes. But that doesn't mean it's definitely going to complete at E, but it's more likely to complete at E than here at this moment. So there's a likelihood the market will rally for the pound yen, especially if the RSI here stays above 40. Okay, so that's the daily, and you see the market already stalling as it's hitting this support following this decline. So the market is looking more and more ready for a reversal in the daily time frame. When you look at the 1 hour time frame, we are still in this declining channel, so it's not ready. But today's action is a very sharp reversal action, and now that has broken this declining trend line, it may continue higher towards 133.70 area or 133.60 something area, this 61.8% retracement zone. Actually, let me be more accurate here. If we 61% retracement zone, excuse me. So that's the near-term target at the moment, 133.70, and if this channel resistance breaks, then we have confirmation for this daily, or at least that would be a signal for this outlook in the daily, and also we should see a daily bullish bar to follow these dojis. Okay, so that would be something to look for next week for the bullish outlook. The bearish outlook still has some challenges. For example, this low here at 131 may still hold as support, but if that breaks, then the market may be in a strong swing decline that could have this swing projection from this previous swing, and that would point to 118.60. But that's, we don't have any confirmation or signals for that yet. The anticipation for the near term, short term, is a bottoming action at 133. Okay, so that's the pound yen. Let me jump to the euro yen. Bearish in the daily. Looks like it wants to continue to be bearish. You see the momentum here, broke below 30, came up and failed to break above 60. So, and now that it has broken below 40, it's a continuation pattern. So at least we could expect it to test this previous low here and possibly decline even further. One method when the market breaks out of a range like this is to measure the width of the range, and if the market breaks out and confirms, then we could project the width in the direction of the breakout. Okay, so I'll let you do that with VT Trader at home. Here's a 1 hour time frame. So 1 hour time frame, we see a break here from this support, and now we have a pullback. So watch for this pullback. It should not go above the 61.8% of this decline over here at 109.60. So that could be your threshold for your bearish outlook in the euro yen. Otherwise, if the market breaks above this, see if it could break the 200 moving average, and if it does, then we may have some short intermediate term bullish attempt. And in the daily, that means this consolidation is not over, and we continue to be within this channel. However, if it breaks below this 107.30 area, then we could look for this kind of breakout projection. Here's a look at the US dollar Japanese yen daily time frame, showing this week continued to hammer at the 85 area, actually came down all the way to 84s, 85 or something like that. But basically we are still supported at 85, but there is no bullish momentum. There's no bullish attempt. Here was last week's attempt, and this week the market brought it back down to the low of 85. So in order for the US dollar to gain, to rebound, first it needs to break above 86.35. This is your consolidation resistance, previously support here. If it breaks above, we may have a double bottom situation, which would suggest a rally towards 88. 88 is an important power line right here, and that should be it. So if you do have a bullish outlook for the US dollar Japanese yen, it should be in the short term, and it should you should respect the 88 area. So if the market does come up here, monitor this area closely if you do have a positive or bullish outlook. Now if the market does break above 88 and confirms it with a throwback, then we may have further rally towards 91. Okay, so that's sort of the next target after 88 is above 90, between this 50 and 61.8% retracement area, also where the 200 moving average is likely to reside if the market continues higher. Okay, so that's the dollar Japanese yen. Still, the dollar is still pressured against the yen, and if the market breaks below 85, it could go further lower, but at the moment we do have some support here, so the first preferred anticipation is a break above 86.35 towards 88. That's the short-term outlook. The Canadian dollar has been very weak. We saw that in the US dollar Canadian dollar pair, but we also see it in the Canadian dollar Japanese yen pair here, as the market finished two swings up, hit 83.50, made a minor double top, and has since declined. It's swung down to the 82 area where it found some support, where this rising support resides. And now, today, the market broke below that little consolidation and is testing this previous low here at about 81, just above 81, about 81.10 area. Okay, so it's finding some support. The market here came from overbought to oversold. So it's not exactly a very strong bearish signal just yet. If the market rallies and fails to go above the RSI fails to go above 60 and comes back down, then that would be a bearish continuation pattern. But at the moment, it still looks ranging in the 1 hour time frame, as the market is supported here just above 81. The daily time frame shows a divergence here, but the market has continued declining. So here we're testing a very important support area. If the market can rally above this 83 area, then that would be a good sign, a good first sign that the market can, that the Canadian dollar can gain against the yen. But for now, look for this. This is pretty uncertain as this congestion approaches the apex. Look for breakout next week in either directions. For me, I would like to, it appears that we may have a long bullish divergence, and I have some bias for the bullish breakout, although the trend has been bearish. So I will monitor this pair closely next week. Swiss franc Japanese yen, here's the 1 hour time frame. We are breaking out of this consolidation, rallying. Your moving averages are spreading. Looking at the daily time frame, also here, we went above 70, so we're overbought condition, which is a bullish signal. When it comes down, fails to break below 40, and now is rallying and possibly breaking above 60. So RSI, the RSI action is a bullish signal. In the daily, the RSI action is more or less ranging, really, but that we see this channel, and if the market breaks above the resistance here, which we need 2 more days or so next week. We may have this swing projection towards 88, 850 area. Okay, so that's the Japanese yen pairs. And that wraps it up for this week. Make sure to check out fxtimes.com for other analysis updates and educational live events. Thanks for watching, and I hope you have a great weekend.